Okay, good morning, everyone, and welcome to this morning's event. We are in now the 42nd Coffee Microcaps morning meeting. My name is Mark Tobin. I'm the founder of Coffee Microcaps. For anybody who is joining us for the first time this morning, and for all our regulars, welcome back. I'm just going to quickly, as I always do, just run through a couple of these slides to get the ground rules in, and then we're going to get straight into it with our first presenter. For anybody who's joining us for the first time, the companies we have presenting on here generally under 300 million market cap, in revenue and approaching cash flow break even, or indeed already profitable. We tend to focus on companies outside the resources and biotech sectors, what I call industrial microcaps. And that can be everything from how we have this morning to microcap technology names, but we also do, microcap retailers, microcap financial services, indeed hardcore industrial products and industrial services businesses. Structure of the webinar, as I said, we've got two companies presenting plus minus over the next hour. Each company gets a 30-minute slot, which is broken down into a 20-minute prezzo and 10 minutes of Q&A. If you do have any questions, please type them in the Q&A box in the nav bar. Please don't put them into the chat function. Just makes it easier for me to moderate the Q&A when we get there. And please note that the webinar is being recorded, and it will be posted on the Coffee Microcaps YouTube channel tomorrow morning. So if you can't stay for the full thingy, you can catch anything you miss in the recording on the YouTube channel. You can follow Coffee Microcaps. Twitter is the best place to get us at C Microcaps. As I said, YouTube for the recordings of this webinar and indeed all previous webinars, and some additional content on there. LinkedIn, and I also write a weekly paid subscription newsletter that you can get on the Substack newsletter platform, where I profile one interesting ASX microcap stock every week. Up first, I'm delighted to welcome back Ed Clarke, co-founder and MD of YOJ, who's going to be joining us from Singapore. After that, then somebody who will be no stranger to anybody who's followed Australian microcaps and small caps over the last decade or so, John Grant, Executive Chairman of FirstWave Cloud Technologies. And with that, I am going to stop sharing my screen, and we should have Ed ready to go on this side. Ed, if you want to start sharing your screen. We're just having an issue with Ed on this side, I think. Let me just... just please bear with us for 1 second, folks. We'll just get Ed up and running here shortly. Actually, what we might do, I see John is with us. John, are you good to present now? Maybe we might just flip the presentations around. If you could jump in and go first, and then we'll come to Ed for the second installment.
Yeah, I can do that. Ever flexible, Mark. No problem at all. Just bear with me. I'll take control of the screen.
Yeah, that's fine, John. Thank you so much. I can See your presentation coming up now. If you just want to make that full screen, John. Yeah, there we go. Looks good.
Right to go?
Yeah, good to go, John.
Okay, good morning, everyone. Thanks for taking the time to join us today. I'm going to talk to you about FirstWave Cloud Technology. I've been in the business now for just over 2 years. Came on originally as non-executive chair and then was asked to take the executive chair role to help the company navigate the listed marketplace. They had no experience in that and they'd clearly made a few blues before that. So I came on to help them, and it's been an interesting journey and a very enjoyable journey to date. The overall attributes of the company are spelled out on the slide. Firstly, it does have and has developed over the last 15 years, more importantly, I think over the last 3 years, a unique cybersecurity-as-a-service platform. And its target is to give SMBs globally access to the best-in-class technologies, and I'll explain what I mean by that in a moment. It is a huge market opportunity. Obviously, cybersecurity has got a huge profile at the moment, but the marketplace was now the word for it, it's huge. $150 billion global spend and rising every year, depending upon who you talk to, somewhere between 7 and 14%. In terms of the target marketplace for FirstWave, overall $29 billion, but when we actually narrow it down and point to which markets we can actually get to and which parts of those markets we can get to, today we've got a $4 billion obtainable revenue market opportunity. We've worked very hard over the last 2 years, and I guess it's also been accelerated this last year to build a partner network. I mean, we use a channel model. It's the only way we can take a product like this to market globally. Currently, we have over 50 telcos. Overall, we have 134 partners in that channel, but of those, we have 50 telcos and ISPs who are billing partners for us. That is, they are actually billing customers and we are getting revenue. That's over 5 continents, and we exited last year with $2 million of international annualized recurring revenues, which was a 7-fold increase in the year, clearly off a small base. We've got a really good management team, and again, I'll elaborate a little bit further on that when we get into the presentation. The board is experienced, people who've been either in ASX markets or in technology markets for a good time. And we have supporting us globally acknowledged technology advisors as well. Our case at the moment is that we believe, for many, many good reasons, and I'll elaborate clearly as we go through, that we're approaching a key inflection point. Some work we're doing on the software now, which we've identified the need for just this year, and that may seem strange, and again, I'll add to that in a moment, but we're doing work on the software at the moment to really almost totally reduce the friction for partners and for end users to actually adopt the software. We're going out through the telco network. The telco network is a big, sometimes inflexible, but once you get inside of a huge opportunity network, within that network, we work with organisations who are much bigger than Telstra, and we work with Telstra clearly. But within those organisations, they are very bureaucratic and it takes time to work through them. And what we're doing with the software now will ease the pain on that. We're due to complete that by the end of Q3 of this financial year. So it's an interesting point from a timing point of view. Our proposition is that we're democratising enterprise-grade cybersecurity as a service. What we mean by democratising is relating to, appealing to and available to the broad masses of the people, that is the world's SMBs. I don't need to tell you about the headlines if you've followed any media at all, or if you're a follower of the tech sector. We live in really interesting times, and interesting, of course, is an interesting word, but we are being inundated, you as individuals, we are as companies being inundated by cyber threats. The costs to the global economy are gigantic. And there is, as I said before, there's $150 billion spend on the back of this trying to minimise this. But these are the headlines we've seen in Australia. The global headlines equally are as bad, if not worse. So that's the environment in which we play into. In terms of the timeline for this company, the company listed in 2016 with one customer, Telstra, and 2 products from Cisco. email security and web security. And it had what we call an on-premise platform within Telstra in Australia. So that was a scenario in 2016. In 2017, that software was taken into the public platform and released across AWS, Amazon Web Services, and firewall security through Palo Alto Networks, which is, again, one of the world's leading firewall providers, was brought onto the platform. In 2018, we entered an OEM agreement, which is an arrangement with Cisco that Cisco undertakes to take our product to market, and we undertake to white label and further develop our product for the Cisco sales force. And we bought in a Malaysian telecom called Celcom. We also bought on down the bottom there additional firewall security from Fortinet, and this is the strategy. The strategy is to bring offer multiple choice security services on the platform, and that was our second firewall security provider. In 2019, working with Cisco, we introduced a second version of our major platform for Cisco particularly, and that was the white labeled version for Cisco, and brought on Digital Wholesale Solutions, who is a distributor in the UK with access to 2,700 small to medium business resellers working in the UK. And we brought on Shelt in the Middle East with access into Africa, but right across the Middle East as well. And we brought on NTT Data in Europe to take our product to market in Europe. And in the same year, we brought on endpoint security, which is securing the devices that fit on the end of networks or attached to the end of networks, your mobile phone or your PC or your laptop. And that endpoint security was with a technology partner, Trend Micro, and again, one of the leaders globally. 2020, we had 13 AWS platforms deployed across 5 continents. We had partners, Dimension Data in Africa, C2 in Africa, Prianto in Africa, Tata in India, and V in India. So we were clearly building our partner network out, and they are strong and big and global companies. In 2020 also, we negotiated to bring on board another product in web security. And this product is a narrow version, if you like, of web security in the domain name area, DNS area. And that was from an organisation in the UK called Simplified. And here we sit in 2021. We have our first on-premise platform deployed outside Australia in the Middle East. And we brought on, with a partnership with one of our partners, Shelt, we've added advanced detection and response to our email, web, firewall, and endpoint services. So in 5 years, the journey from a shareholder point of view has been very up and down during that period, and you only need to look at the share price to see that. And we are building in terms of partners, and we are building in terms of offerings on the platform. So the problem, what are we trying to solve? Well, I've already said cybercrime estimated to be a $6 trillion peril, certainly exacerbated by COVID-19 when everyone's working from home to some degree. The other problem we're trying to solve is that for an end user, particularly a small to medium business who may not have the expertise from either a technology point of view or a security point of view to be able to navigate the marketplace, that marketplace is enormously complex and enormously fragmented. And providers in that marketplace are aiming their efforts at very, very particular sections within that marketplace. So, for example, you will get global email security providers, or you'll get global web security providers. With us, you don't get that. You get a global everything supplier. And again, I'll elaborate on that in a moment. In terms of the service provider market, the telcos and ISPs, I mean, they've never been under greater competition. Their revenues are under pressure, their margins are absolutely under pressure, and their costs are really hurting them. And they've needed now for some time, and this is accelerating, to find additional sources of revenue. And of course, what we represent to them is an additional source of revenue. And if you then go to the end users, as I said a moment ago, small to medium businesses around the world lack the resources necessary to protect themselves. They just don't have the capability. And by the way, in terms of small to medium business, in our marketplace, small to medium business might be in the sort of up to 500 seats. In the Indian marketplace, it's up to 10,000 seats. So the small to medium marketplace is defined worldwide, not by the numbers of seats. We define it by their capability and by their capacity to pay. This is a graphic representing our products, our offer. I'm just going to step you through it one by one. So at the top, in terms of inputs to our platform, we work with these global organisations, global cybersecurity providers, to provide us with their email security from Cisco, web security from Cisco and from Simplified, firewall security from Palo Alto Network and Palo Alto, endpoint from Trend Micro, and advanced detection and response, as I said, a joint venture with Shell. And as new innovations come on in cybersecurity from a service point of view, we will bring those onto the platform as well. So this is a major attribute of the platform. And if there's one reason why I got involved with this company, it was this reason. It was the reason that they are not trying to build the email service security appliance. They're actually taking the best available in the world, and they're then working with that, taking the software components of that, building that software component and making it more functional, and bringing it onto, in a virtualized way, bringing it onto a platform which it has developed. And that platform then multi-tenants that software license. So if I was a large organization, I went to Cisco and I wanted an email security service, I would buy what they call their Ironport security service. And I would pay a lot of money for it because it's a hardware-oriented security service, and the hardware has to go in my data center. Hardly the opportunity for a small to medium business to do that. What the software does, what the platform does, is take the software components of that service, add functionality to it, but it is the base license that we buy from Cisco, and then it virtualizes that onto our platform. Multi-tenants, so multiple users can use that one license, which decreases the cost per user. And then we offer it out through the service network, which I'll talk about in a moment. But that's the core of it. The core of it is best products in the world on this platform for small to medium businesses. The second part of it is the platform, and this is the IP. This is what 15 years of development has been doing, producing intellectual property that can do what I just described. But as well as that, it can then take this multiple of sourced services from multiple vendors, and it can put the management and control of those behind one pane of glass. So if I'm a service provider providing these sorts of services to thousands of small to medium businesses, I can't be managing each of them discretely. I have to manage them as one, otherwise my cost to serve gets too high. So here I sit in a service provider, telco, ISP, looking at all of the deployed services that I have across my SMB base from one pane of glass. That is enormously powerful and enormously cost-effective from a service provider point of view. And that's how we go to market. We go to market through global systems vendors such as Cisco, telcos and ISPs and service providers, global systems integrators, distributors, and MSSPs. But by far the major volume of our partners is in the telco area. And these are value-added services that we offer to them at a price which is suited to the SMB marketplace, at a low cost to serve, because they can manage these all through one pane of glass. And there's our simple and affordable protection for SMBs globally. So that is what the solution is all about. What it also, in this, when I talked before about us being at an inflection point, we've not had, certainly in my view, but in our view now, we've not had the sort of interface for our SMB end users which are needed, the sort of interface that you and I work with on our mobile phone. That's part of the work we're doing now. And the adoption of one of our services, email, firewall, web, etc., one of our services will be like the flick of a switch in settings on the iPhone. That's how we intend to make it, how easy we intend to make it. And what it will then do and tell our end users is you are safe or you are not safe. And if you are not safe, then you need to do some stuff. And here's what you need to do. And if you can't do this yourself, then you need to go to your IT support, but this is what you can do. So this is active threat management and on-time notification as to where an organisation's at from a security point of view. There is nothing like that available in the world for an integrated suite of security services across email, web firewall, and endpoint, and advanced detection and response. So we're taking a $4 billion marketplace in terms of our obtainable revenue today, using our partners whose logos you can see there. And this is what it looks like in terms of the leverage that's available in how we approach the market. So on the left clearly is our solution with the input technologies from globally leading security service providers. Throughout each of the regions, we are working with level 1 partners. All of those whom I've spoken to you about now are what we call level 1 partners. And our definition of a level 1 partner is they have a partner network and an end user network below them that they serve. So they are the start of huge leverage in a go-to-market channel model, which we refer to conveniently as one to many more, but us to a level 1 partner, multiples in each region, to multiples of their level 2 partners, to then multiples of their end customers. Now, the opportunity through this is self-evident. This channel has enormous leverage because there are hundreds and hundreds of thousands of SMBs in front of hundreds of level 2 partners, in front of possibly 50 level 1 partners globally. So you can do the maths. The problem with this, of course, is that it takes time to actually build any momentum because you have to get through level 1, level 2 partners before you get to the end user. So there are clearly trade-offs. And that's the position that FirstWave's been in for the last 2 years that I've been working with them. We are building this channel in order to get to the many millions of SMBs, but it takes time. Right now, we have 13 platforms across the world, and we have people in the place that you can see there, but we have global coverage. And for a very small company with sort of 85 people, we're doing a really super job. In terms of the management team, aside from myself, Ian Bartram is our CFO, and it's been a delight to have Ian on board. And Ian is very experienced in the space that we're in, small listed ASX companies in technology. Simon Ryan is our CTO, and Simon's been with the product since it came out of Telstra in the early 2000s. So this product came out of Telstra Research Labs. Simon was involved in that product within Telstra Research Labs. That was bought into a private company when Telstra closed down that research lab, and Simon has been with that product since then. Globally recognised as a leader in cloud technologies and in security. And from a board point of view, Paul McRae, non-executive director, has been with the company since before the listing. He is an industry veteran. He's had international experience, senior executive at Technology One, but he also established Message Labs, brought it into Australia and into New Zealand. So he knows what you need to deal with when you're starting to bring new products into new territories. David's been with us for a relatively short period of time, but he is a very experienced, not only in the corporate lawyer, but specialising in capital markets, corporate governance and compliance. And for a business such as ours, and the onus on small listed companies is huge. And when people talk about the costs of running a listed company, they play out most significantly in small listed companies. Because when you're not cash flow neutral, as we're not, and you're producing 4 Cs every quarter, and you are using share plans to incentivize and to reward, and also to minimize cost to your employees, the paperwork, the governance framework is very complex. And David has been enormously helpful, and I don't know how any business could do without a person of his sort of capability. From a technology point of view, we've got Kevin Block. Kevin has had 40 years of technology experience, and I've probably known him for 30 of those. He's had 20 years in Cisco. He's come out of Cisco. The last position he had for the last 12 years was Chief Technology Officer for Cisco in Australia and New Zealand. And Kevin has been enormously helpful in this business. And the track that we're on at the moment, which is about removing the friction, a large part of that has been because of Kevin's input. So in terms of highlights of the financial year 21 just passed, international revenue growth continued off small base, but sevenfold in the year. More billing partners, 134 partners in the channel and 52 billing. More services to sell with 3 more services brought on this year. We continue to invest, obviously, and we continue to consume cash. And we have $10 million cash on hand at the end of last year. And we believe, approaching this key inflection point where adoption of our technology, particularly at the SMB end user end, will drive demand within our telco partner network as well. And then further work we're doing to build more APIs into our software that allows our software to sit really integrated into our telco's billing systems. They're the two big pieces of work that we believe we believe from which we can say that we're absolutely approaching this inflection point. So in summary, $150 billion spend in this cybersecurity marketplace, $4 billion immediately addressable by us. We make enterprise-grade cybersecurity-as-a-service accessible for SMBs for their full perimeter, email, web, firewall, and endpoint in an integrated fashion for the first time ever. Our leverage channel model uses telcos and ISPs on a one-to-many to many more sort of business model. And a key inflection point is approaching as friction is removed by our third quarter of this financial year. So that's it. Thank you very much. Thanks very much, Mark, for having me. I'll just get out of this presentation and come back into video. Hey?
Yeah, thank you. You can leave that contact slide up maybe, John, while we're just doing the Q&A if anybody wants to note Ryan's details there. A quick question for me, I'll just kick it off. With the whole, COVID situation, work from home, varying firewall protections for a lot of people, has the pipeline of inquiry increased, from these SMBs that they they're going to whoever, most likely their telco or their ISP, or maybe if they've got a managed service provider, what can you offer me? Like, we know we need to kind of be more secure because we haven't got everyone in the office. So have you seen a big uptick in the pipeline? I appreciate it's still probably a longish sales conversion cycle, but have you seen a big increase in pipeline and inquiry?
Well, again, we're too removed, but there's absolutely no doubt that at our level 2 partners, the demand has increased dramatically. The ability to fulfill has not changed because our level 1 partners are still working really globally for almost all of the ones we can see, still working globally to put their security services in place. That's the issue I spoke to a moment ago. It's a slow-moving channel. I mean, we've got a big channel now with 134 partners and 50 billing, and that will continue to grow, but it's a big channel and takes time to move. So the drivers there, really, which is what you're referring to, Mark, the drivers from the SMB end, noting today that 43% of attacks worldwide are at SMB organisations, and that will only increase because what's happening in the threat marketplace or the threat activity level is more people doing it around the world, and it's so easy to do. If you're competent, it's so easy to do. So there's absolutely no question that there's been huge impetus from the SMB marketplace, only partially satisfied through the level 2 provider sector and only partially provided for in the level 1 partner network. That's what we're working on. We're working from this end to drive it down through the network. There's no telco partner that we work with that says this is not the best thing since sliced bread. Getting them to make it deployable and getting it to their level 2 partners and getting it to their SMB users is what we're continually working to create momentum around.
Question from the audience, John. Maybe if you could maybe do a small, maybe kind of worked example, your revenue model with each of the level partners.
Maybe if I do it from our SMB end user end, and that will give you sort of the actual spend. Okay.
Yeah, we can work.
So if you do a 100-seat email security service deal with an SMB in Australia, it's about $800 a month.
Okay, and then
now that's the retail price. There's clearly margin goes to the channel, and our average margins on revenue that we get is about 55%.
Okay, great.
But it's a volume marketplace, Mark. You've got to drive volume. You've got to scale.
No, exactly. And that leads me on to another question I had. I mean, you've got some pretty well-known level 1 partners. Should we expect to see any more level 1 partnerships? Are you pretty happy that the lineup that you've got there gives you kind of sufficient geographic coverage kind of everywhere in the main markets, you know, US, Europe, Asia, or is there other maybe partners in some of those other geographies?
No, we're not satisfied. And you mentioned COVID a moment ago, and I've tried to stay away from that whole thing because I don't know, everyone's pretty tired of it. However, factually, COVID hit Europe and the UK, as we know, really, really hard. Our two partners in Europe and UK, DWS and NTT, are still getting back to normal. So we've not had any growth of any significant measure through those two marketplaces, and we will continue to look for new partners. This will happen, you know. I mean, best intentions, these level 1 partners will come on board with all the enthusiasm that we'd expect that they'd have, but for various reasons, they might not actually build traction. So we have to have a big partner network. I said a moment ago that 50 level 1 partners, and there are, I don't know how many there would be globally, but there's a lot. But 50 level 1s of the size that can drive to level 2s that can then drive to SMBs is where we would like to end up.
Okay, so there's a lot of scope to add
a lot of scope to grow
that based on where you are today then.
Yeah, I don't, you know, I've not operated in a global marketplace prior to this company. I've certainly operated with global providers and I know that market well, but the size of the world's marketplace is enormous and you just need to get to it. So for example is, when it became clear to us that the UK and Europe wasn't going to come out of COVID quickly and therefore people weren't going to return to work and there wasn't going to be the pressure that we now know exists, we moved across into the Middle East and into Africa. So we're working with some of the major partners in Africa. I mentioned Dimension Data and C Squared, and we're very careful, of course, about which partners because it is Africa. But we're working with the major telcos in Africa now. So, and they're providing us with the same response that every telco partner has that we work with. You know, they want to do this. They see the benefit of this, and they're the ones who are now starting to build momentum. Same thing in India with V, who's a merger between Vodafone and Idea. V is one of the top 3 telcos, as is Tata Teleservices. And again, we're working with them and we're building momentum with them. So we've been able to sort of shift, to get around the sort of COVID thing, we've been able to shift our markets. And that's cost, of course, but the opportunity is where you can go and sell. And that's what the reality of this is. If you can go to a market, everyone you talk to will actually start recognizing what we're doing is what they need.
Yeah. John, we've gone slightly over time, but thank you very much for swapping from second to first. It was great to hear the story firsthand, and we look forward to further announcements in due course.
Thanks very much, Mark, and thanks to your listeners today.
And I do believe now we have Ed Clarke joining us from Singapore. Ed, if you want to start sharing your screen.
How are we doing? I'm on. I think my picture should be showing, Mark, so let me know if it's not.
It is, and maybe if you can just maybe make it full screen it. I don't know if that's possible.
I should be able to.
Yeah, I think we're good now.
Okay. Fantastic. All right. Is that showing out ready to start? Or?
Yeah, you're looking good on my side.
Very good. Okay, so hello everyone and welcome. Thanks for joining. My name's Ed Clarke, Managing Director of YOJE, which is a company founded in 2015. So YOJE is a supply chain based technology company, and I was trying to think how I'd explain it today, and I sort of refer back to a conversation I had yesterday with one of my executives. So recently I had a call from a recruiter who was really excited about what we were doing, and I spoke to my executive and I said, well, what did you tell him we were doing that that caused that. And he said, look, and this executive was about 15 years at WiseTech actually, and very senior there, and runs sales teams, product teams. And he said, look, what I'm really excited about in terms of what YOJE do is that we connect all of the different players in land transport, from the enterprises to the SMEs, and create a marketplace that gives visibility, that gives actually availability, because in many parts of Asia Pacific and the world, the whole freight forwarding market is very fragmented. It's not digitized at all. So it's very hard to create efficient supply chains because of that lack of digitization. And so he said, look, I'm just really excited that we can get the biggest players in the world and get all of the smallest players in the world and connect them up and create price efficiencies, create cost efficiencies, and create something that hasn't really been done before. And I said, well, how would you compare that to, say, an Uber Freight or a freight broker in the US? And he said, well, freight brokers will let you offer work, but they're not connected to the operational side of the network. They're just a sell-side player. And then, you know, how do you work with, say, an Oracle TMS? And they're just a carrier side player. So he said, I'm really excited that we're a two-sided player, and that's been really interesting for us in our recruiting. We've had people join from Google, we've had people like Mark join from WiseTech, and they're really excited about this concept we bring, which is the YOJE network and the end-to-end solution, which I'll share more about today. And I think one of the key reasons we've been having really great people join recently is that we're at this point now where we've signed some very large contracts, and we're starting to roll them out across the region, and things are really starting to take off. And that's represented here in our corporate highlights, where we can see that we've got 3 global enterprise clients. So these are top 10 in the world. We actually have the #1 shipper in the world who's got 22% of the global market share of container shipping as a customer for Asia Pacific, already live in 5 countries, and that's Maersk. So Maersk, if you read through their quarterly announcements, you'll see that their big thing is we want to move from shipping into land transport and logistics, which is our space. And that's really interesting because it's a concept of, they're already, you know, if you look at a McDonald's concept, they were selling burgers and they wanted to add revenue to what they're doing by saying, we'll add fries and Coke and turn our average revenue per customer transaction from 1 container movement to 1 container movement plus 3 or 4 land transport movements, which is probably the last place they can pick up significant revenue. But we provide a really unique solution for them because we've enabled them to connect all of the players that would traditionally have to be managed by a forwarder into our software to create a marketplace. And I'll give you a visual representation of what that looks like shortly. Additionally, we've got France's #1 logistics company and they're a world top 10, YOJEE'S. So YOJEE'S is about 3 times the size of Toll for those in Australia. And they're actually a marquee listing customer over at WiseTech when WiseTech listed. And YOJEE'S is recognised by Gartner and others as a pioneer in the technology space. We've been working with them for over a year, and we're solving some very large problems and creating a lot of opportunities for them in terms of land transport across Asia Pacific. One of the key initiatives there is Belt and Road tracking. And if any of you have seen lately the difficulties people are having finding shipping volumes, what we're connecting up for them is the China Belt and Road initiative from China into Singapore. So essentially what people are starting to do is truck from, you know, Singapore across Asia, Singapore, Malaysia, Thailand, Vietnam, and back down again. So really what it gives you is a couple of solutions to take away the risk of getting access to shipping at this point, but otherwise it enables you to essentially move goods across Southeast Asia at the speed of air freight for the cost of sea freight, and then have less warehousing if you're a brand, and connect all of that up. So it's a really exciting product to do cross-border, multi-leg tracking, and do everything from first mile to last mile, and I'll show you some visualizations of that. The final enterprise customer we have is Kuehne+Nagel, who are the world #2 in the forwarding and 3PL space. So they're just a dash smaller than DHL. So Kuehne+Nagel signed with us for one country to do an e-commerce project for the largest e-commerce marketplace in Southeast Asia, which is the, I guess, Amazon equivalent will be the best way to describe it. So we started working with them. We did that solution. We were going from day one, 10,000 parcels a day through our network, and we hit, I think, peak in some of the campaign seasons of 25,000 a day. And so we rolled that out. We've been working with them for a little under a year, and in the background, we were doing a lot of work with them to get us approved as a solution for Asia Pacific by their global group, which means that we would be able to solve any solution for any country as an official product. And so recently we signed an 18-country extension of that agreement. So we're able to roll out our product across Asia Pacific. And so the way we describe it is in terms of what does that mean? How does a company that does logistics software produce revenue? So we take a very modern product-led growth approach to this. And so what that means is remove all the friction for adoption. We're very agile in our deployments. We can roll out in under 90 days. And essentially we charge our customers per transaction. And in our investor deck, we give a description of what that looks like. There's a subscription fee plus. So if you're moving a parcel, you'd pay 20 cents per delivery. If you're moving a pallet, you'd pay about 40 cents per delivery. And if you're moving a shipping container, you pay about $1.40 per movement. And so it's very simple. It falls into all of the operational costs and billing models of our customers. So it's frictionless to deploy. And we're looking at getting a piece of each movement in a market that's about 12% of global GDP with some of the biggest companies in the world. So we're embedded and we're starting to create really big imprints, and I'll give a picture of that shortly. So I guess the question that I really want to start with is, what's the problem that we solve, and how can a company that's only 5 years old get 3 of the top 10 logistics companies in the world? And the answer gets back to a bit about my introduction. We solve both sides of the solution. So for example, Maersk wants to be able to move freight across the world and across countries, but they're not a freight forwarder. And so they have to use subcontractors, and subcontractors are something that's very, very common in Australia. It's near impossible to move all of the freight you move through your own fleet because you become very asset heavy, and volumes of freight are hugely variable. So for example, in e-commerce, you'll find that the number of parcels moved on a Monday will be 4 times the number of parcels moved on a Tuesday. So you have such variations even day to day, and that's due to buying patterns. You buy Friday, Saturday, Sunday online, has to be delivered Monday, and Tuesday's only got Monday's volume. So it's very variable. So you need to be able to flex up and down with subcontractors, but it also enables you to scale very rapidly at a low cost while maintaining your SLAs and visibility. And so the traditional broken model here is what we're describing as some of the key pain points in land transport. And so that will include things like very low visibility. And I'm sure everyone in this call as a consumer has had issues where they've had something delivered and all you get is what we call a milestone. So you'll see the last milestone, last time the parcel was seen. And that could be 3 days ago, 2 days ago. You have no idea where it is when you check. You have no idea what time it's arriving. And the best in class probably delivery window of the legacy services is you're going to get your parcel delivered tomorrow between 8 a.m. and 10 p.m. Please be home. Otherwise, you'll have to go to the post office and collect it. So we remove all of those issues around real-time visibility across networks and provide that to the shipper, to the carrier, to the enterprise, and to the last to the recipient. So we turn all of those silos of different subcontractors and different legs across the network into a really visible process. We digitize all of the information that's being sent across the network and streamline it into APIs, into ERP systems. And so what that means is that if I'm an enterprise, say I'm a Kakuna Nagel, traditionally I wouldn't be able to invoice until all of the contractors had consolidated their information and sent back all of the proofs of delivery. And that could take 30 to 60 days until I can produce my invoice after the shipment is completed. Whereas through this system where everyone is connected through the supply chain, I can go from that 30 or 60 days to invoice into invoicing on day 0 through an automation and an API connection into my EAP system, like say SAP. So we solve a lot of the problems about cash flow, which is really exciting for the forwarders who obviously work in very tight margin marketplaces. Say, call it a 5% margin game. And if you're sitting on cash for 30, 60, 90 days more than you should, it creates a lot of issues. It then also enables seamless decision-making across all of the different carriers and all of the different legs. So it becomes a very simple, fast to deploy solution, which gives you visibility across the entire supply chain. And I guess this slide here is really meant to represent what an end-to-end shipment looks like in the 10-year-old boy terms. You've got first mile, you've got the cross-border point, and then you've got the last mile. And up the top of this slide, we're trying to show traditionally in every different sector of supply chain, there were different software players, which meant that you couldn't get the information you need because they don't necessarily integrate and play well with each other. And so what we do is provide that end-to-end solution. And that's really, really important when you look at the nature of modern logistics, of e-commerce and what's happening in Asia Pacific and even Europe and North America. You want to be able to connect to the cross-border solution. And this is where we have actually a lot of people ask us, will say, hey, WiseTech's in supply chain as well. Do you compete with WiseTech? Do you support WiseTech? And the answer is that we integrate really well with a platform like CargoWise or a platform like YOJEE'S, those warehouse and cross-border systems. So in any multi-leg movement across border, there's lots of customs and administration and tariff and GST administration work that needs to be done. And so that's where CargoWise steps in and handles that cross-border administration. So for example, YOJEE'S is a very public and very heavy CargoWise user, but they selected us for the physical movement of the end-to-end product. And so we integrate into YOJEE'S global system, as does WiseTech. And so CargoWise is doing the cross-border administration. YOJEE is doing the physical movement as pictured here. So managing the consolidation of all of the goods into the truck in the first mile, the trucking across border where it's trucked, and then all of the last mile movements, the route planning, the route optimization, and everything else. And so I guess a question is, I talk about Maersk, I talk about some of these other companies we're working with, and what does that look like that's different to other companies in what happens? And what we talk about is the network effect. So traditionally, software would be only supporting the hub or the warehouse I'm operating and the fleet that belong to that warehouse. What we create through our software is the ability to seamlessly integrate all of the available hubs, assets, subcontractors, and fleet across the network. And so we call that the network effect, because what it enables you to do is start to have options on who you use to deliver. And as I mentioned earlier, the ability to scale up and down seamlessly without buying more networks. And what that then creates in the network effect is a solution where when you come in and use the product, you can actually build out all of the different subcontractors and carrier within the network and start to choose the most reliable. You can apply them to different customers, you can apply them to different companies, and you can actually make much better cost-based decisions because it's much easier to bring in more carriers. So procurement-wise, you can reduce your cost of movement because more carriers can bid for work, and you can make decisions on highest margin movements across the network. And then you can connect all of that up and start to offer different types of solutions. So you can see here, this is the visual representation of the network. All of the pink dots here are the subcontractors, and the subcontracts create capability. And essentially when you use that, you can really just start to control your destiny and also provide different types of services, all tracked in real time. to create this network in a traditional legacy model, you'd have to have an IT team working for a large number of years to connect every single carrier to whatever software they had, and then probably a 3-week, $50,000, $100,000 project to connect a single carrier to your ERP enterprise platform. With YOJE, I think our record is we've rolled out 86 subcontractors in a single quarter. So you can scale up and connect very quickly, and it's not onerous. And what it does for our customers is it creates that visibility and seamless operations and SLA management across their entire network. What it does for us is start to help us capture really rich data on who's an operator across Asia Pacific, which was previously unknown. And it also creates potential further SME customers because they're being introduced to our network by the big carriers who are creating a capability. These SMEs, the subcontractor network, then become opportunities for SME sales down the track. And so I thought I'd share a bit of information about where we're at. Our last quarterly was a really interesting one. Over the last few quarters, we've been showing record growth, 30% growth over the last couple of quarters on average. So we've almost doubled as a business in the last 6 months because of the number of large customers that we're rolling out and those implementations beginning to take off. And so we're a company with $18.4 million in the bank. We're only burning about $1 million a quarter to support this large operation that we're rolling through. So that's really exciting that we've got huge customers under our belt that we can deploy to across 18 countries. And we've got the runway in our business to go and continue those deployments. And so there's a lot of momentum starting to pick up in the business. We're heads down on deployment. We're not having to worry about capital raises and things like that at this point. So it's all guns are blazing at getting this product out around the region and trying to keep up with the demands of our customers. You know, Maersk, we've rolled out 6 countries in the last 6 months. Kuehne+Nagel, as I mentioned, we're one of 18 countries. So it's starting to roll out their upgraded agreement, making us an official solution. And so that's going to keep us busy for the next 12, 24 months. And same with YOJEE'S, so we're starting to roll out across the region. In the last quarter, our revenue moved through $1 million for the 12-month period. So that's a big milestone. That's, you know, the hardest thing in a B2B business is to get through that $1 million revenue because it's a very different game to the business to consumer space. We've really found product market fit as demonstrated by our 3 customers. And that's really the beginning of the growth curve now. So we've broken through the $1 million for the 12-month period. And we're starting to show, last 2 quarters have shown 30% quarterly growth. Our last quarter was up 210% on the same quarter in the previous year. So that's really exciting for us that we're showing the work we've done in building a great product and signing extremely large customers in terms of revenue. And you know, when you're growing at 30% quarter on quarter and you've only got $1 million burn to work away at, it's a really, and you've got $18 million in the bank in a long runway, we're in a really great position to take off. And as I mentioned, all our focus now is on strategy and implementation because we've got that runway in place. Our recurring revenue is growing significantly, and that's that transactional per delivery model and the subscriptions. And it's hugely gross profit heavy when we're moving to that space. So, you know, you could be north of 80, 85% in terms of our margin per delivery after we've paid our platform fees. So essentially every dollar of recurring revenue that comes through takes $1 off our burn, and that's really exciting. As I mentioned, 19 countries addressable. We've got 6 hubs live and 5 under implementation. So over the next 3 to 4 months, those 5 hubs under implementation will turn into live hubs. And we've proven that a hub will generate about $300,000 of revenue. So we have a company objective of 126 hubs, and we've proven that we can generate $300,000 out of a hub. So it's starting to show what a hub means, what these deployments mean in terms of revenue in the midterm. We're also really confident of continued year-on-year growth and quite large year-on-year growth because of the nature of our customers. We have a really healthy pipeline of enterprise, and we have that huge SME base that we can start to convert into customers moving forward. So just in charts, we've got our, I thought I'd add this in to give a bit of financial information about how we're tracking. So revenue, you can see from Q2 of last financial year, we've doubled the business. Our cash receipts and revenue year on year, up 75%. We see that we can really increase that number over the next 12 and 24 months in both financial years because of the foundations that we've been laying over the last 12 months. So that's really exciting. And I'll speak more about some of the metrics that are really healthy in the business at the moment. One of the really important things that we do through our route optimization, through the technology that we aid our enterprise customers and the SMEs, we have AI algorithms that are helping them plan their last mile deliveries, their first mile pickups, could do more jobs in a day, create more work out for a single vehicle. All of the digitization and all of the intelligence that we've built have shown a couple of really important outcomes. And what's really interesting in logistics is almost all positive outcomes in efficiency related to CO2 reduction. So it's a big focus of our enterprise customers because they have to report on these things. A lot of them obviously European companies with European requirements to report on their CO2 impact. So when we come in, for example, we've shown in the Philippines in the e-commerce space an 89% increase in delivery efficiency. And that was created over a 6-month period where we helped use the big data that was available in our platform for our enterprise client to understand their network and what it actually looked like from an efficiency perspective, how the vendors and how their businesses that they were picking up freight from were performing, and where all the addresses that they were dropping off to and where they were. And so what that means in real terms, why is 89% increase in delivery efficiency important? Essentially, you're doubling the revenue of every vehicle you have per day. So that's hugely significant when you're operating in an environment with 5% margins, and e-commerce is very tough last mile. Obviously, it's a very competitive space. But when you can have technology come in and replace their legacy technology that they're using around the world and show that you can double the revenue of a truck in a day, hugely significant from a profitability and competitiveness perspective, but massively significant. And what's really important for a lot of us is that we're showing that you can halve the number of trucks or double the number of freight per truck, which has huge CO2 impacts. The other piece that we've seen, to give you an example of, okay, what are the other cost savings that you can create with your software? Our route planning, when we implemented that in the Philippines, there used to be 4 or 5 people working overnight to plan the freight movements of the 10,000-20,000 parcels for the next day. Which driver will do it? Where do they deliver to? So we moved that from 4 or 5 people overnight, sleeping away, working away from their families, to a single person arriving 2 hours before the vehicles left, pressing the optimization button and having an answer within about 10 minutes. So with those people then are able to move to operational roles or sales roles, and they can go out and deliver very quickly. And they can also replan through the day. If they have vehicles break down or drivers don't turn up, press the button again and they can replan. And the result of that, from five humans working as smart as they can to get freight out, to the AI doing all of the planning for the freight across the day, is a 30% increase in efficiency in kilometers traveled to complete the deliveries. And in last mile, as you can imagine, if a truck is delivering, say, 100 or 300 parcels in a single day, that has a big impact on another big impact on the efficiency of vehicles, and removes a lot of the cost that even in Australia, companies like Toll and Linfox are very manual in the way that they optimize, plan and manage fleet. So we've democratized that optimization technology. Anyone can have it. Why that's important, if we go back to our network model, is traditionally only the big company would have optimization. But what gets impacted, and what probably everyone here has experienced, is that when it goes to the subcontractor doesn't have the ability to optimize and hit an SLA or a delivery window. So say you would like to get delivered to between 10 and 12 in the morning, it's the best efforts of the driver to try and work out how to do that, even if he even knows that that's what you prefer. Whereas when the SMEs can get access to this type of optimization technology, it means that all they have to do is press the button too. And then the enterprise has much more confidence that across their network, they're going to hit their SLAs and they can start to charge for tighter delivery windows, and they start to go to tenders and offer a much higher on-time performance record than their competitors, because their whole network is optimized, as opposed to just the first point and that the person that's not even managing the vehicle. So huge implications in terms of efficiency and profitability, but profitability, excitingly, is really heavily tied to the CO2 benefits of what we do, and helps control the network. So what's really important to some of our customers in Vietnam and other countries across Southeast Asia is that everyone on their network is accounted for, because the last thing that, say, a Maersk or a Kuehne+Nagel or a YOJEE'S want to do is have, say, children driving trucks in the back end of Vietnam. So it helps make sure that everyone in the network is appropriately qualified. So last slide I'll tie off to is kind of, where is YOJE heading? And this is the future in numbers. So we target 3 hubs per country, which means that across our 3 customers, 18 countries, we've got 126 hubs of embedded growth. And so that's from its existing customer base, that's the addressable opportunity. And $300,000 is the proven value of a single hub over 12 months. So that's the objective of the business. And the agreements we've been signing recently are taking really rapidly towards that. So with that, I'll wrap up and pass it back to Mark.
Cheers. Thanks, Ed. Yeah, if you can leave that slide up there with the investor context, that'd be great. I know you're very focused. I'm going to kick off the questions here. I know you're very focused on the Southeast Asia / Greater China market, and obviously it's a very big market in its own right. Is there anybody doing what you're doing, I guess, that, I mean, we could look at as a peer that, maybe across Mexico into the US, into Canada, and kind of Canada into the US, into Mexico, for example, or, now that kind of in a post-Brexit world, the UK is out of the EU and that whole space. Do you know of anybody who's doing something similar, or are you guys, laying down the template basically?
Yeah, look, we're probably the only player I can find that does that double-sided solution. So providing the big players with access to the network and providing the small players with the best-in-class digitized solution to optimize their operation and meet really strict SLAs and provide, real-time visibility back to anyone interested in following it. And so I see, if there were people doing similar, for example, in Europe, then a Kuehne+Nagel or a YOJEE'S probably would have taken a European product, but they can't find anything similar, which is why also anecdotally, all of our enterprise customers pay recommended retail price, and there's no discount there, because when they look around the world for a capability and bring all different customers, the technology companies into a tender for the software contract, we're the last one standing when it comes down to, do you do all of the things that we really need to do? So we see huge potential to take this beyond Asia Pacific. Asia Pacific's about 50% of the global logistics market, but we see huge potential to go beyond. And we've got the customers to take us beyond as well. And they've seen the benefits, the 89% increase in delivery efficiency, which really stands up tall when global is looking at future solutions.
Okay, great. A question from the audience, Ed. With the current 19 countries under contract, when do you expect to roll out 3 hubs for each of these contracts? In other words, 57 hubs in total. So I know you said the next 12 to 24 months is a lot of Kuehne+Nagel work. Is it fair to say it's probably that timeline, kind of 24 months before you get to the 3 times 19?
Yeah, look, it's for the 126, that's our 3-year objective. It isn't if you think at any adoption curve, it's never linear. It's always an exponential curve, and that comes back to the first implementation is always the hardest. The second implementation is easier, and the 10th and 20th is much faster. So the first implementation, from what we've seen, may take that 90 days, and we have some customers talking about implementing into a country or a hub in 10, 15, 20 days. So that will really increase as our customers, they're the ones that they invest in project teams. So every one of our customers has a project team that manages the implementation. It's not on our side. We help them be really good at it, and we support any questions they have. And so we expect that adoption curve to be an exponential curve in terms of number of hubs implemented per quarter, and the reverse exponent for time per implementation.
Okay, great. And then I want to just check here. Somebody's doing the maths on it. Is it? Did you say it was 300,000 per hub? Is that, or they're trying to?
Correct. So that's what we've proved. So we tried to figure out how to explain the value of a hub. And so far, the proven number that we have from a hub over 12 months is 300,000. I wouldn't say that that's a particularly large hub, but we don't yet, obviously, I don't have enough information to give you a really confident average, but that's probably a mid to small sized hub that we've implemented, and that's generated $300,000 of revenue over 12 months.
Okay. That's as you say, that's one where you've actually got real life revenue coming out of. And then another one for me I remember when I lived in Singapore, the whole ASEAN agreement was coming in. I think it was 2016 or 2017, the free trade area for basically the whole of Southeast Asia. Now that has gone live, has that really opened up the viability of the whole land transport model, because you can move goods a lot freer than kind of the pre-agreement, and have kind of companies, I know it takes time to get out of old ways of doing, but are they really embracing the kind of free trade area now?
Yeah, good point, Mark. And to give you the best answer to that, I think would be to say that even during COVID, where every country has been obviously shutting its borders to foreign travel, the trucking network has stayed open and is growing faster than ever, because I think all countries in ASEAN understand that the supply chain, the importance of being a participant in that Southeast Asian supply chain is both from an economic benefit and from getting goods to where you need to get to is absolutely critical. So that's shown it's really stood up. So trucks are still running freely across Asia, even though countries are in lockdown. And so we've seen a huge growth in that Asia trucking solution.
Okay, great. And then another question on the hubs. Once a hub is installed and up and running, let's work on the 90 days for the want of a better timeline. Does it basically generate revenue from kind of day 91? Is that the way to think of it?
Yeah, exactly. So it generates, the revenue will pick up from day one as well. So there's also obviously a bit of a growth curve in the adoption per hub. So the hubs that we have now, some are mature, some are maturing. And so, we haven't realized yet the full value of all of the live hubs. So we'll see that sort of flow out over the next couple of months as well. So there's a lot of growth left even in the existing live hubs. And that's, again, the adoption curve includes, say, the first 90 to 120 days of live usage, because they might start to pull in more projects into that system. And so we're seeing that at the moment, and we expect to see the live hubs increase a lot in volume over the next 100 days as well. Okay,
so just so we're clear then, so when you get a hub up and running, they're not going to suddenly shift 100% of their business onto the YOJ software. It's a gradual transition over time, basically.
In some cases, we'll see 100% day one. In some cases, what's really exciting for us is they'll actually move the APIs from their customers and point them into our system, which makes us very sticky. But say customer 1, 2, and 3 will be live from day one, and then they might start to roll in a few more customers as they get lives, because there's no need to wait for every hub, every integration to be completed to go live. And so that volume will grow as they have a customer that has an ERP system. They'll get the API connection and point that directly into our product. The benefit is we get 100% of that work, and we're very sticky because no one wants to redo that project again in 1 year or 3 years or 5 years. So it takes, pointing the APIs that they have and connecting them up with our system, that may take a little bit of time, but at the same time, it probably increases the stickiness of our product and the time our product lasts within that network, from the normal contract length to say that 10, 20-year period that enterprises typically use technology.
Okay, great. Ed, we're gone slightly over time. I'm going to leave it there. Thank you very much for coming back and giving an update to the Coffee Microcaps audience. And yeah, we'll be keeping an eye on developments as we go through the next 12 months. It sounds like it's definitely starting to pick up speed on your side.
Definitely a very exciting time, and definitely a great time to get involved in YOJEE'S journey.
Okay, thank you, Ed, and thank you everyone who dialed in this morning. We will have I appreciate it is in the peak of results season, but we will have another Coffee Microcaps morning meeting next Thursday, and I'll be sending out the details in due course. And with that, I wish everybody a good rest of their Thursday.